Welcome back, folks. Hope you're having a good morning so far. Our research team is joining in to help you prep for the day and to talk about all the cues that you need to watch out for as we kickstart trade. There's a big move that's happening in crude overnight, and what would the impact be? Sonal is here to give us the details. Sonal, morning.
Good morning, Sonia. Well, yes, crude prices, they fell overnight. Around 1% move is what we saw on the downside as far as crude is concerned. There are a couple of concerns as well. We are talking about US rate hike possibility, which is increasing concerns. That is something which we saw in the equity markets as well. However, China transportation demand, it is expected to increase, which could support demand as well. So a couple of reasons why crude is in focus. The other reason while Oil India and ONGC will be on our radar is because Morgan Stanley has increased the target prices on these two stocks. They maintain non-consensus overweight on Indian energy producers. They've become more bullish because now they will be able to raise production when global peers are seeing declines, and government policy support, according to them, is underappreciated right now, and that is the reason why they're bullish here as well, because that will drive earnings for these companies. They have an overweight rating on both the stocks. For ONGC, the target is raised to 199 rupees a share, and for Oil India, 323 rupees a share. Yes, oil prices have come off overnight, but Morgan Stanley note also keeps these two stocks in focus.
Okay, all right. Thanks a lot for that, Sonal. But Sonal, you're also tracking Prestige Estates. There was some con call takeaways yesterday. Quite a few brokerages have written. Tell us more.
Yes, there's an analyst meet which happened, and it happened in Mumbai, which is the new market for Prestige Estates, and some bullish targets that the company has put forth for the company. They aim to double their overall residential sales by FY26. Right now, it's around 13,000 crore rupees. So they are looking at growing it at 25% CAGR every year to around 25,000 crore rupees. Contribution from Bengaluru is expected to decline to 40%. It was the biggest market for them. For Mumbai, it is expected to increase to 20%. They also plan to multiply the lease income by 7 times in 5 years. Commercial also is a big business for them, and planning to double their hotel business to 3,000 keys. This is by FY27. They think the existing residential pipeline will generate substantial free cash flows. That is by FY23, FY27, and 40% of this will be used to fund the lease and hotel capex that the company is talking about. They expect to spend around 2,500 to 3,000 crore rupees every year for the capex plans and project additions as well. However, this capex commitment will lead to higher debt as well. Peak debt will be around 12,000 crore rupees. But yes, expansion plans and strong guidance is what the company has given.
You know, I just wonder, it's going to be in more buildings, more cars, more people, but where are the roads? And there's the infrastructure. You're only stuck in traffic the whole time in Mumbai. So I shudder to think about all this inventory coming in, and then, you know, sort of more, you know, chokes across Mumbai. Prashant is smiling, and I think he's been a victim of this. I've seen your Twitter rant, yeah.
No, there was a video which Archana, our colleague Archana Solanki, did about the 4-day work week. Did you guys watch that? I watched that. This is why I was smiling. There is AI.
You have tall hopes. We're talking about extending trading hours, and you're talking about a 4-day work week. All right. Well, let's move on. BEL will definitely be in focus. I mean, you know, the whole defense space is really buzzing, and BEL has signed an MOU now with the ADA, which is the Aeronautical Development Agency, for advanced medium combat aircrafts. Now, we don't know what the quantum of this order is, but it is definitely a positive for them. BEL and ADA will, you know, come together and design, develop, produce and supply the internal weapon bay computers for the AMCA. Now, this was also announced way back at the Aero India 2023 event, so it's already news that is known. So, you know, we're just going to watch out for this stock. But remember, if you just pull up a 1-year chart, or rather from Jan of 2021, BEL has already doubled. So perhaps a lot of the good news is in the price. Order wins continue to come through. So that's a 12-month chart of BEL. Big moves coming in there.
Oh, absolutely. All right, that's 95 on BEL. Wockhardt is the next one we're going to focus on. Ekta is here with more. Ekta, morning.
Thanks for that. Well, Wockhardt did hold an investor call, so that's definitely a positive. I expect the stock to probably be in the green on account of takeaways from that. They have mentioned that the annual savings of 12 million is been achieved via restructuring of the business, which includes shutting down one of their manufacturing facilities in the US, which is Morton Grove. Also, they have an agreement with Serum for the vaccine manufacturing facility at UK. They have already received 10 million pounds as a contribution for reserving capacity. Remember that the target is 150 150 million doses across 15 years. Serum has identified 2 vaccines. The company plans to probably scale it up in the next 8 to 12 months. Novel antibiotics, which is basically their research arm, Mroc is one of the antibiotics which is already in the Indian markets. They expect approvals in 8 emerging markets in the next 6 to 9 months. WCK-5222 is another antibiotic which is under discovery. They expect to market the product in US, China, India by 2025. Long-term debt has reduced to 608 crores, remember, from a peak of over 3,200 crores at one point. And the company, in their investor presentation, has indicated in big bold letters that the promoters are fully committed to the company. I expect the stock to probably see further buying today.
Okay, all right. Thanks a lot for that. Ekta's stock was higher in trade yesterday. Ekta believes that it will open well in the green. Mangalam joins us as well to run us through details on Delhivery. Morning, Mangalam.
Good morning. So Delhivery, we see some positive moves on that counter, primarily because, one of their key clients is doing extremely well. And this is not me saying it, this is Macquarie saying it. Macquarie's, thesis on Delhivery, one of the biggest fears was Meesho slowing down, but that hasn't happened. In fact, they believe that in the December quarter, Meesho has done much better than expected. They've done almost 260,000 orders, which is up 37% year on year. In that, Meesho has actually pipped Amazon to rank second after Flipkart, which does about 3.2 million deliveries per day. As per Macquarie's analysis, Meesho accounts for nearly 20 to 25% of deliveries volumes. So if that's doing well, then it is a positive for them as well.
Okay, thanks a lot for that. So, well, that's at least one space that's picking up. But Mirza International is another one that you're looking at, Mangalam?
That's correct. So Mirza International, remember in November 2021 when they announced their intent to go ahead and, make a demerger of the company, the scheme of arrangement, the stock was 80 rupees and has rallied all the way up to over 200 rupees now. And now it's the NCLT which has approved this scheme of arrangement. What exactly is this scheme of arrangement? The company will amalgamate RTS Fashions Private Limited into itself, and they'll demerge the key business that Mirza International has, which is the branded business, into a company called Red Tape Limited. Of course, they're the owners of the Red Tape brands of shoes. The demerged entity, Red Tape, accounts for 55% of their sales and 50% of their profits. A large part of that has already been baked in the up move that we've seen in the stock, but we still see some mild green given the NCLT approval that's come by.
Okay, all right, Mangalam, thanks very much for that. Now, commodities are in focus, and what's happening there? Is there a risk off there as well, along with equities? Manisha is here to tell us more. Manisha, hi, morning.
Morning. Risk off, yes, in various classes, but not really in metals, because here, yet again, we have seen strength continuing. So you have the iron ore and the steel prices trading at a 7-month highs today as well, with iron ore prices giving you returns of 7% on week, and steel is up 4% at the same time as well. It still is the theme about reopening post-lockdowns in China, the multiple stimulus measures that we've seen, and a cyclical drawdown of inventories on LME and Shanghai as well. China also keeping its interest rates at near record lows has helped, and so has the fact that there is rebound in the China property prices following 16 months of contraction. Clearly seems to be supporting the construction metals. So iron ore and steel on my radar. You could look at the companies like NMDC, Tata Steel, State. All of them have been in favor.
Okay, all right. Thanks a lot, Manisha, for that. And thanks to our entire research team. Here's a quick recap in case you missed out on any of the stocks with positive news flow. There's ONGC, Oil India, Prestige Estates, Bharat Electronics, Wockhardt, Delivery, Mirza International, NMDC, SAIL and Tata Steel. While once again, no stocks with negative news flow, but that doesn't mean stocks are not going to be in the red. Just that a lot of, positive news in terms of order wins as well as prices moving higher. But we'll pose all of these questions to our next guest. Deven Choksi of KR Choksi will be joining in for some fundamental stock analysis. We'll also speak to the management of Equitas Small Finance Bank, P.N. Vasudevan, to discuss their business outlook going forward. Stay tuned.